Hope you're doing well. We've got a very busy calendar today. We've got the ECB, we've got the GDP for the United States, and we've got the durable goods. And we had the Bank of Canada yesterday, but they disappointed. They were supposed to hike 75 basis points, but they did 50. So that was of note. I didn't think they were going to disappoint, but they did. And now what we're seeing on the intraday, we're seeing quite a lot of heavy slides on the indices and risk generally. But what it's doing, it's encouraging the retail guys to short. And this is precisely what we want. If we want things to rally, we want them to sell. So these intraday slides are encouraging them to short. So that's risk on. So it's obviously quite scary if you're trading and things are falling and you're wondering why. It's because it needs to fall in order to flush out the dumb money. So it's all about entry and patience. And yesterday we had a doji candle on the daily on the US 500. So there was a lot of technical indecision on the S&P. And I got a bit chewed up on the S&P yesterday, but it is fine. I'm still up on the week, but it's not great ideally. But, you know, I was trying to, I guess I was trying to be smart and trading it, but I needed to be a little bit more patient. So things are looking good for risk, but it's all about entry and, you know, getting the right time and timing it so it doesn't coincide with the data releases. So when ACB comes out, it's going to send quite a bit of a wobble on the markets. Likewise to the durable goods and the GDP. So it's just about time and patience. And also another thing you can do is set orders. So you don't open at market. You can set an order to buy or sell at a level that looks like a good level to enter. So market entry might not be the best way to do things. It might be orders. So the VIX has been crushed as well. We might go below the yearly pivot. If we do, that's going to be risk on. So quite risk on here. Aussie is also over here. So that's a risk on indication because the Australian dollar is quite risky and it's moved over here. So that would be a risk on sign. Yields fell, so that's a risk on sign. We do need them to come down a lot. They're way, way too high, really. Yeah, they're just really ridiculously high. And we had a 3-month, 10-year inversion. See, 4.01, 4.01. The 3-month yielded greater than the 10 years today. So we had a yield curve inversion on the 3-month and 10-year. And that's probably why the S&P was quite choppy and we end up as a doji candle. And that's that. So things are looking quite risk on, but do expect things to fall in order to flush the retail guys out. So it can be quite tricky. There's the inversion that we had, but it's now no longer inverted. It's now gone back to like normal in speech marks. So that pumped greater than the 10-year. So that was quite scary. That's risk off. We don't want these high. These need to come down a great deal. I mean, really, the 3-month could be here. 2.5% really, but you know there are things going on in the world that's causing these to pump higher. And we also had that tech sell-off in China and Hong Kong, so things are a little bit uncertain and recession worries. And also the PMI data all around the world is disappointing as well. That's indicating recession as well. S&P, so we made a buy, they shorted it and they've gone long on UJ, but I had just recommended to everyone in Discord just to be really careful of the dollar yen. I'd probably just sit out right now. You could try and short it, but your stops would have to be very wide and then you could potentially get stopped out. It might just be better to wait for it to actually become a sell at the big picture and then you could sell it. So you see how we've got a mismatch here. So buy and sell. You'd want the two to agree. S&P does agree, okay? And pound yen doesn't agree, so you probably might want to avoid the GJ right now. So yeah, I suspect we're going to see a bit of dollar strength because we've got the ECB today, and so we're going to potentially see a little these slight shirking, falling a little bit. Anticipation of a strong USD, which technically is the case on the big picture. Short term, but potentially we could have a strong dollar today because of the ECB. And Lagarde might be, she might be doing her waffling and jawboning, and she might be really dovish. If so, then the euro could fall a lot. And so we could see a case for a strong USD, and it's going to impact our trade of the day as well, because our trade of the day is a risk on currency pair. and if we go risk off, it won't be a good performance. Yeah, potentially we could have a strong USD. Dollar yen is the weakest from last Thursday, and Aussie USD is the strongest from last Thursday. So it could be we have a strong dollar today, and it'd just be a little bit annoying, be like a wrecking ball again. I just said that about that. Our trade today is a risk on currency pair, so we'd want things to carry on rallying, which they might or they might not. So you just have to be careful. Membership level for Patreon, so there's the link, so click that and then you can join any tier that you like. This is incorporates the spreadsheet and Discord, in case you're wondering why that's more expensive. It's the spreadsheet, you know, this thing that we have been working on for a few years now, and it tells us trade setups. So we've got CAD being weak. Now that would make fundamental case because they disappointed, so you could look for CAD shorts and look to buy, you know, maybe Aussie CAD or Kiwi CAD or Euro CAD. Assuming that stays where it is, then that's going to be a decent short, because what's happened is that they're long and they've added long. So therefore, that's why that's gone over here, and the size indicates performance, price performance, and it's not performing particularly well. Why? Because the retail guys are long and they added long. So could be a good trade up there. So that's how you use the spreadsheet. So if you do want to use a spreadsheet, it will have to be the FX as a side tier or the premium tier. Okay, but the spreadsheet is amazing. You get hundreds of signals a day just by using the bubbles, like I just demonstrated. There's Friday's candle. That wick just had to probe that support, and we bounced quite strongly. And there's that doji candle from yesterday. It just didn't really do anything. It moved a great deal, but we end up closing where we opened, so it was a doji. And so that's that. S&P sideways. I can't comment on the direction if we're going sideways. So it could probably fall because we need to flush these guys out. So that's a scenario to consider. S&P is that they could be going long. They could be buying up here. So that warrants a bit of attention. I'll do a quick 2-minute video after this bulletin, and we'll cover the indices, and then I'll probably be taking it easy for the rest of the day, because I woke up at 2 a.m. and I got an eyelash in my eye, and so I'm quite tired. So the German 30 could be making a sell as well, but note that would be a risky sell, like US 30, because retail guys are already trapped. So it doesn't necessarily have to fall. There's the trap there. So you know how we switched the bias? They shorted around about there. And likewise, they shorted it here. And you can see the reaction on price with the retail herd sentiment. They shorted it there, and will probably continue to do so until as long as they keep holding short. If they hold short, then we'll come up. And if we get a strong dollar case today, then this is going to suffer, because at the high level it's a sell, and if they go long, then it's adding to that bias. So we probably are going to fall. And this is quite subject to the US yields and the USD. So this could fall. I've got a feeling it probably will, because the ECB and the Guard and our press conference, you might, the euro might suffer a little bit. Ideally, we don't really want it below parity, because we want things to be two-sided. We don't really want a strong dollar all the time, because it just gets boring. So there's the liquidity targets, and the stop loss clusters for EU are both above parity. So I think from a liquidity perspective, parity could be safe, but it does depend on the Guard. At the high level, it's a buy, but they didn't really do anything on their shifting. They're buying the dip on UJ, and if they continue, then we'll flip over, right? And that'll be the first time that's happened for a long time. That's just trading for you. So they were absolutely rinsed on the way up, and now they're trying to buy it as it falls. Okay, so be careful. Gold made a sell. See, he's got the sells to align. I've got a bit of a croaky throat, so I think I'm going to take it easy today. So the behavioural score matrix is quite good, that they're getting punished. Now the crowd should be getting punished. They shouldn't be getting rewarded, because they're normally wrong. So this would be okay. Yen is slightly paying them, and dollar is slightly paying them. So be careful with the yen and the USD today. And We had Aussie Kiwi, but we actually reversed and it got to our break even. But however, I did do a screenshot with it being up 30 pips, so that is a positive. It did actually rally 30 pips, so it's not too bad. It's just kind of annoying with the nature of trading FX is that we get a decent result, and if unless you're careful, we'll come down and it'll get to our entry. So you want to know where your TP is, and you definitely know where your SL is. What I'd probably do is that whenever you have a trade of the day, if it's up 30 pips, just move your stop there to entry, and with any luck, it continues higher. But lots of things are quite out of bonk. We've got a lot of uncertainty around the world of recession, and we've got that strong USD. We had the tech earnings yesterday. Google disappointed, and it was a big sell-off, huge sell-off from Google. And Meta, the Facebook company, also fell as well. Initially, it pumped, but the EPS, it was pretty awful, and then the share price absolutely plummeted. So lots of uncertainty and things. So this is new. And it just tells us the breakdown of technicals, the shifting across time, the high level, and the currency baskets, which are bubbles. And then it summarizes them in the QDP signals. It's suggesting Kiwi USD buy. However, because we've got the ECB, we're going to probably see a strong USD. So I'd probably have that as a caveat. Be careful. And doesn't necessarily mean it's going to be like 100% guarantee. It's just basically just saying, things are aligning for a buy. So you look for a small time frame entry, and then it could be a good one. You could also wait for after all that horrible risk event that we got today, and you could enter after. That might be a good idea. And we could be seeing a wrecking ball on the USD. And economic calendar. So there's the ECB, and we've got the press conference, and there's the 75 basis point hike. And that's like a big deal because the ECB never ever really hike at all. So that's quite a big deal. Durable goods, and we've got jobless claims, and we've got GDP. Now the Fed will be looking at GDP, so that needs to be it needs to be to consensus, if not better. If it's worse, then we'll have to wait and see. So that's going to create a little bit of alarm bells for risk, I think. So keep calm, always trade safely. I'm going to be taking it easy because I've got a sore eye, and I feel like I've done a long week already. And we had API issues in the sheet, but that's now fixed. So that's something. So be careful. I'm going to do a quick 2-minute video now for the private feed, and I wish you a good day.